Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking copper futures. May copper futures settled up about 7.5 on the basis of a tax cut. It was not a Donald Trump U.S. tax cut, it was a tax cut in China. The Chinese government is cutting taxes to their population directly to the consumers by about $55 billion U.S. in the form of a sales tax cut. Now, they're doing this with a direct focus on growth and demand. They recently had blowout numbers earlier in the week. They beat on GDP at 6.9%. They beat on industrial production. They beat on retail sales. And adding a tax cut into this is a decidedly Western idea with a direct focus or direct target for growth in consumer demand. That put a little bit of a bid to copper because copper, or rather China, is the largest consumer of copper globally. And they're doing that, again, with a fiscal program of building residential and commercial properties. We also had a small indication of a production slowdown. Rio Tinto, the huge global miner, reported a 37% drop in deliverable production. Now, a decent amount of that has to do with the strike that we saw earlier last year and into this year at the Escondida mine in Chile, which is owned by Rio Tinto. But again, that was a pretty large number, 37%. It shouldn't have been that high. So there were concerns that they were having a little bit of trouble getting that mine back online. And lastly, the dollar was lower most of the day, ended up rallying in toward the close against a basket of currencies. That actually should lower copper a little bit, but didn't do it as of today if the dollar were to continue to rally. A lot of that happened on Mnuchin's comments that were close to a tax cut. This is the same guy who said it wasn't going to be before August. He said that last week. This week he says we're close. I'm not sure which one is real, but copper ended up on the day. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.